International Public Sector Accounting Standard, or Ipsas 20, is basically a rulebook designed specifically for government and public sector organizations. Its full name is Related Party Disclosures, and its main purpose is to bring transparency to financial reporting. You can think of it as a spotlight that shines on the financial relationships and transactions between a government entity and its related parties. These parties could be key management personnel, their close family members, other government-controlled entities. The standard doesn't try to stop these transactions from happening. Many are perfectly normal and necessary for government operations. Instead, it simply requires that they are clearly and openly reported in the financial statements for everyone to see. The importance of this standard really cannot be overstated, especially when we talk about public trust and accountability. When a government department spends public money, citizens have a right to know where that money is going and whether the transactions are fair. Ipsas 20 helps ensure that any potential conflicts of interest are brought out into the open. It allows stakeholders, like taxpayers, auditors, parliamentarians, and international lending agencies who need to understand the nature and extent of these dealings. In the context of Pakistan's public sector, understanding who qualifies as a related party is the first essential step in applying Ipsas 20. The standard provides a clear definition to avoid any confusion. A related party is a person or an entity with a specific connection to the reporting entity. The reporting entity is the government department or public company preparing the financial statements. This connection could be through control, significant influence, being a member of the key management team. It's not just about direct relationships. It also includes close family members of key individuals. The most obvious related parties are key management personnel. These are people who plan, direct, and control the public sector entity. For a federal ministry, federal secretary. For a state-owned enterprise like Pakistan International Airlines, or PIA, chief executive officer, chief financial officer, members of the board of directors. Their decisions can directly impact the entity's financial dealings, making their relationships critical to disclose. The definition extends to close family members. Ipsas 20 says close family members are those who may influence or be influenced by the person. This typically includes a person's spouse, children, dependents. The logic is simple. A senior official might be influenced to award a contract to a company owned by their spouse or child. Disclosing such connections is vital for transparency. The core principle behind Ipsas 20 is that transparency in related party transactions is absolutely essential for accountability and good governance. Public sector entities operate using taxpayers' money, and their primary duty is to serve the public interest, not private ones. Transactions between a government body and its related parties carry an inherent risk. This is because the personal or professional relationship could influence the outcome of the transaction, leading to decisions that are not based on merit, efficiency, or the best value for public money. Disclosure acts as a powerful disinfectant, bringing these dealings into the light for public scrutiny. In Pakistan's public sector, the need for this transparency is particularly acute. The perception of corruption or favoritism can severely undermine public trust in government institutions. When a government department, for instance, awards a procurement contract, citizens and oversight bodies need assurance that the process was competitive and fair. If the winning bidder is a company owned by a relative of the department's director general, questions will naturally arise. Ipsas 20 forces the disclosure of this relationship. The first practical step in applying Ipsas 20 is for a public sector entity to systematically identify all of its related parties. This is not a one-time task, but an ongoing process that requires diligence and a clear methodology. The entity must create and maintain a comprehensive list of all individuals and other entities that meet the definition of a related party. This process should be formalized and embedded within the entity's internal control procedures to ensure it is done consistently and accurately every year. The responsibility for this task usually falls on the Finance and Accounting Department, working in close collaboration with the Human Resources and Legal Departments. For a Pakistani government department, this process begins with identifying its key management personnel. The Human Resources Department would provide a list of all individuals holding senior positions with significant authority, such as the departmental head, directors general, and members of any governing board. Once this list of key management personnel is compiled, the next layer of identification involves their close family members. This can be a sensitive and challenging task. The entity needs to develop a mechanism, such as an annual declaration form, where key management personnel are required to declare their close family members and any entities in which they or their family have a controlling or significant interest. Next, the entity must identify other related entities. This involves looking at the broader government structure. The finance department would need to obtain a list of all other departments, agencies, and state-owned enterprises that are under the common control of the same government, whether it's federal, provincial, or local. Once a public sector entity has identified related parties, the next step is to recognize transactions during the financial year. A transaction is a transfer of resources, services, obligations, regardless of whether a price is charged. Even non-monetary exchanges and free services must be captured and evaluated. Accounting systems must flag and record related party transactions separately, not mixed with arm's-length dealings. Recognition requires a systematic approach. Finance should establish procedures to scrutinize major transactions, especially in procurement, sales, loans, grants, leases. When procurement processes an invoice, check against the related parties list. If the supplier is on the list, tag it as a related party transaction. Coordinate across departments to prevent slips. Create internal checks and balances focused on this risk. Example, Pakistan. Imagine a state-owned enterprise, OGDCL. OGDCL hires a consulting firm for a geological survey. Finance checks ownership details of the firm against the related parties list. They find a board member is a partner in the firm that flags the payment as a related party transaction. After identifying related parties and recognizing the transactions with them, the final step is to disclose this information in the notes to the financial statements. Ipsas 20 is very specific about what needs to be reported. The goal is to give users enough information to understand the potential effect on financial position and performance. Disclosures must be clear, concise, and comprehensive. This is where the entity formally communicates related party dealings to the public and stakeholders. First, disclose the relationship between parent and controlled entities, even if no transactions occurred. For the Government of Pakistan, consolidated statements list major controlled entities. PIA Pakistan. Steel mills, various authorities. This establishes the landscape of control. Individual entities must name their controlling entity and, if different, the ultimate controlling party. Example, a provincial development authority names the provincial government. This sets context for other disclosures. Second, key management personnel. Disclose total compensation paid, not individual amounts, an aggregate figure. Short-term benefits, salaries and allowances. Post-employment benefits, pensions, other long-term benefits, termination benefits. Finally, if there are related party transactions, disclose the nature of the relationship. Also describe the transactions and state the amounts. Disclose outstanding balances. Example, a government department procures IT services for PKR 50 million from a company owned by a director's son. Disclose the relationship, the nature, and the amount. The journey towards full implementation of Ipsas 20 in Pakistan's public sector is not without its significant challenges. The government of Pakistan operates through a vast network of federal ministries, divisions, attached departments, provincial governments, state-owned enterprises. Creating a complete and accurate database of all these entities and their key management personnel is a monumental task. The lack of a centralized, integrated financial information system that connects all these bodies makes it difficult to track and consolidate related party information. Another major challenge is the lack of awareness and the lack of technical capacity among public sector accountants and officials. IPSAs are relatively new to many who have traditionally worked with cash-based accounting rules. Understanding the nuances of Ipsas 20, such as defining significant influence close family members, requires specialized training and a shift in mindset. Many finance departments may lack the skilled personnel needed to navigate these complex requirements, from identifying relationships to correctly measuring transactions. This capacity gap can lead to incorrect or incomplete disclosures. Cultural and political factors also pose a significant hurdle. To overcome the challenges of implementing Ipsas 20 in Pakistan, a multifaceted and strategic approach is required. The first and most critical solution is to invest heavily in capacity building and training. The government should roll out comprehensive training programs for finance officials, federal, provincial and local programs designed by experts in public sector accounting tailored to Pakistan's context. Training covering technical Ipsas 20 requirements, training covering ethical importance of transparency and accountability. Secondly, leveraging technology is crucial. Prioritize development of an integrated financial management information system. Include a centralized database of key management personnel. Include a centralized database of state-owned enterprises. Design the system to automatically flag potential related party transactions. Provide a single source of truth. Improve identification, recognition and consolidation of related party information. Strengthen the legal and regulatory framework. Ensure adoption is backed by clear regulations and directives, making compliance mandatory. Couple this with robust oversight and enforcement. Empower and equip the Office of the Auditor General of Pakistan. Brief public accounts committees in assemblies. Create clear consequences for non-compliance. Finally, use a phased implementation approach. Start with a pilot program. Pilot in a few key ministries and large state-owned enterprises. Gather lessons, refine processes, and develop toolkits for wider rollout. In conclusion, Ipsas 20, the standard on related party disclosures, serves as a powerful instrument for enhancing financial transparency and accountability within Pakistan's public sector. Its application is not merely a technical accounting exercise, it is a fundamental pillar of good governance. By requiring government entities to shine a light on their financial dealings, key managers, their families, and other state-controlled organizations, the standard helps to expose potential conflicts of interest and ensures that transactions are conducted in the public's best interest. This transparency is the bedrock upon which public trust in government institutions is built and sustained. The practical application of the standard involves a diligent, three-step process, meticulously identifying all related parties, systematically recognizing all transactions with them, and clearly disclosing the nature and value of these dealings in the financial statements. From a federal ministry disclosing the total compensation of its top management to a state-owned enterprise like Pakistan Railways reporting its transactions with other government bodies, each disclosure adds a layer of clarity. This information empowers citizens, parliamentarians, auditors, and civil society to scrutinize how public resources are being managed. While the path is challenging, with training, technology, legal reform, and political will, Ipsas 20 can move from a rule on paper to real transparency in practice, strengthening trust between the state and its citizens.